Destination Africa, brought to you by Standard Bank.
We're putting the spotlight on Africa's agricultural sector, the opportunities as well as the challenges that come along with investing in the space of the African economy. Lawrence, let's pick up on this discussion about infrastructure with you. We looked at this challenge and touched on it a little bit in part one. The lack of infrastructure in remote areas can be an extreme risk. We're looking at unreliable electricity supply, bad roads, etc. And that pretty much a deterrent to investment.
Oh, indeed it is, yes. It makes it very difficult. And not only power, intermittent power, which is, of course, very disruptive because, you know, nature, when the crop's on the land, you've got to reap it. Mm-hmm. And if the power's off, it creates all sorts of problems. But also telecommunications in many parts are very, very difficult. So, yes, it is an inhibiting factor. But there are areas that are opening up that where governments are putting the roads and rail. Rail is another aspect. One of the interesting ones that I've had to deal with is the development corridor in the southern part of Tanzania, where they've created a corridor and they've brought banks together and they've focused on telecommunications and all other forms of infrastructure. So it's a focus thing. And that whole area is well supplied with infrastructure.
Mohit, is it necessarily all on government? Like we see in mining, I mean, for those investments to make money sense, we see private investors coming in and building infrastructure around them that would be supportive of that industry moving forward, an investment model that seems to make sense within that space. Do you see it taking off within the agricultural space?
I think I should divide that into two parts. You know, one is within the country's infrastructure, and then other one is within the country. Mm-hmm. Now, within the country, within small farming blocks, when I say small, you know, there's thousands of hectares, you see people doing their own stuff and building out infrastructure. You know, people are drawing lines. See, one attraction to Africa is because of the point where infrastructure is in its maturity. It's, you know, it's not quite high is what I'm you know, obviously alluding to. That leads to a situation where the trading spreads are huge, if not, you know, very attractive. You know, let me not say huge, but they are very attractive. The logistic costs, for instance, can be 77% and, you know, 70-80% in some of the commodities. So that you know, the food and the commodity companies not just make money from trading or, you know, processing or branding food. It's, you know, a lot of the margins that, you know, come in the industry come from logistics. Mm-hmm. So because of inefficiencies, there is opportunity to make good spread. Now that said, you know, you see a lot of focus, particularly on the international companies, in processing and manufacturing infrastructure.
Mm-hmm. Infrastructure constraints have that bearing on operating costs, as you say, you know, the cost of doing business in a country. Again, moving back then to government's role, are subsidies a solution for the industry?
I do not believe so. You know, if you, sorry, jumping in, Dr. Lawrence, I didn't want to cut in.
No, please.
See, looking at, you know, in the last 30 years, there have been two, you know, massively big successful stories in the tropical part of the world, countries which have gone from net food importers, you know, close to famine, to some of the big exporters today, Brazil and India. You know, Brazil's subsidy support is just 5.7%.
Yeah.
India is similarly in that range. But if you look at developed countries, it's 25-26%. And, you know, even in this environment, you know, both Brazil and India are very cost competitive producers without government aid. So what I would say is, you know, government aid can be made in different forms and shapes. You know, maybe they could put up seed capital to enable cross-country infrastructure. So going back to your point about rails, you know, roads, risk mitigation, maybe, you know, facilitating small and medium enterprises through credit guarantee schemes, etc. You know, I would point towards U.S. They're, you know, they're very successful small and medium enterprise through these credit guarantees.
Bode, just how much of a challenge do infrastructure constraints place on business operations, looking at the operations that you've invested in?
A whole lot. In Nigeria, a lot of infrastructure is not in the right state it's supposed to be. And you find out that this affects rural access, which is where most of the output is coming from. There's also the issue of power, which is being addressed right now with the power sector reforms. So by and by, infrastructure is a key deterrent to investment in agriculture. I will also say that in the case of Nigeria, a lot of focus has to be placed on the investment of government in infrastructure. One of the most successful agricultural projects in Nigeria today is the Shunga Farm Holdings in Kwara State, where the government has taken on the responsibility of providing all of the infrastructure that is there. Now, it's perhaps the best integrated agricultural enterprise in Nigeria today, and it is doing well. So, because of the level of capital that is available to investors in Nigeria, you'll find that except somebody else comes in on the ground floor to provide the infrastructure so that the private sector will then be able to come in and do all of the primary production and processing and all that, then it will not be very successful. Yeah. So in the case of the agricultural investments we have considered, there are investments where there has been a provision of infrastructure, in most cases by the state, where we have then gone in and overlaid it with our investments in primary production or processing.
Yeah. Well, we've touched on some of the investment opportunity that presents itself, Lawrence, in the agricultural space, also some of the challenges that deter investment. Let's take a closer look at approach. Are investment opportunities presenting themselves across the board in all commodities?
Again, it's variable. Bode mentioned the sugar. Plantation crops, generally speaking, are the easier ones, and they're the ones that attract the investment. Sugar is one example, tobacco is another. It's when you come down to the things like fruit and vegetables that it becomes tougher, because of a whole host of factors. Plantation type agriculture lends itself very much to economies of scale. The bigger you make it, the less the unit costs are. So if you look across Africa, Mozambique, to some extent in Angola, certainly in Nigeria and Ghana, the plantation crops are the ones that are attracting the most attention at the moment.
Bode, let's get some insight from you there, because while there are possibly broad-based investment opportunities that present themselves here, some would say that you've got to be focused nevertheless and leverage off the niche opportunities that present themselves and look at that value creation and that potential of growth. What's your approach to where exactly you're dedicating your investments?
Well, we are focused more on agricultural produce that have a short gestation period and that also require a minimal capital for us to turn around. Necessarily, you'll find that there are a lot of opportunities, but like you said, there has to be focus. We are focused more on arable crops and food crops right now, as opposed to the tree crops, because the sheer size of the Nigerian population at about 168 million people presents us with a ready market. When you look at what is imported into Nigeria today, at about ₦1 trillion of agricultural importation per annum, which is about $7 billion, we find out that there is a market for us to address in there instead of looking at the cash crops. So basically, we are looking more at food security right now. We are looking at short gestation products. We are looking at products that we can substitute instead of imports. I'll give you an example. In Benue State, there is a large production of food products that actually goes to waste now because nobody is processing them. At the same time, we are importing about $980 million in fruit concentrates per annum. One of our investments is into the production of fruit concentrate for the local market. There's an existing market for that we are addressing with this production, so we do not really need to begin to create the markets and build the value chain all over. So one of the key things we focus on is the gestation period of our investments. We realize that agricultural investment has to be long-term, but we also have to look at the return expectations of some of our investors. So we look at things that are low-hanging fruits that we can quickly turn around and move on to the next thing.
Mohit, we had Bode there touching on food security as an issue. How does the issue of food security in your books come to bear on the sector and in turn the investment scenario?
See, while we take a long-term view and we're happy to put out long-term financing for the farms, quite often you see the banks leaning towards the food security-oriented crops, which are the staples, which is rice, maize, wheat, sugar, and palm oil. So that a lot of financing from our side particularly goes into these sectors.
Where you've got, Lawrence, the supply for local demand needing to be catered to, there's the potential to develop as well and delve into the biofuels arena. What investment potential are we looking at there? What's the viability looking like?
It's again, it's very variable. You see, the problem that we went through in recent times is when the fuel price, the oil price, dropped down way below $100 per barrel. Most of these biofuels were no longer economic. And we're just coming out of that cycle now. So a lot of things that were shelved, a lot of projects that were shelved are now having the dust blown off them and being looked at again. Because with the oil price around the $110 to $120 mark, the biofuels are becoming more attractive. One of the issues, of course, is if you use biofuels, if you use crops that can be for food, you run into opposition. So you've got to find crops that are not readily edible.
So you've got to be very clever here with your investments. How would you advise foreign investors on entering the African market?
Well, I would say that you've got to go for the low-hanging fruits that Bode mentioned to start with. The what I call plantation crops, the maize, the cassavas, and cassava produces a wonderfully good starch, by the way. Those are the sort of things to go for initially. And then, of course, in places like Uganda and Nigeria, Ghana too, the fruit's falling on the ground. So if you can harness that and process it, there you've got a project. So those are the things to focus on.
Well, a good place to leave the discussion. Thanks so much for joining me at the desk today. Of course, we've had Lawrence McCrystal, Director at Agrifica, with me here in studio, along with Mohit, Arora, Director of Agriculture over at Standard Bank, and Bode Abikoye, CEO of Aterios Capital, joined us from our studios in Lagos, Nigeria.